Hello guys, today is the 12th of March, Thursday, and I wanted to share quickly with you some observations about this market. And I'll spoil it all right away. I'm cautiously bullish about the crypto space, and there is a number of indicators that could be taken into consideration here. And the first one to keep in mind is the USDT dominance. And I think I mentioned it before, but I have sort of invented these new indicators. Obviously, it's nothing new, and it's been around for some time before me, and there are different interpretations of such price behavior in different school of technical analysis, so I'm joking a bit when I'm saying that it's mine. But at the same time, I call it the 50-day moving average catch up. And despite the fact that we're looking at USDT dominance right now, you can see it in action here. The idea is as follows. When the 50-day, the red line in this chart, is catching up, you can make an assumption that it should, obviously most of the time it should stay away from it because it's the primary intermediate term moving average, but you should also expect bounces of it, like this one and this one and this one. And if for some reason it catches up, that means that the support, the institutional support, because the 50-day is often referred as the primary institutional, especially the active ones, the active boutique funds should be consulting this moving average a lot. And if they are not there, that means like that the support is lost, at least temporary. Okay, you got it. What I wanted to say there. So it could be temporal, or it could be actually permanent, and sometimes it marks the change of a trend. So what's about to happen now, as we see, is this potential catch up. And if we go back further in time, I remind you that we're looking at USDT dominance, not the individual names behind it. We see that this dominance and subsequently the quest for safety, because when people and institutions buy stable coins, that means that they are afraid of volatility, that they are expecting negative volatility, and it's already happening. The market is correcting because there is no reason to stay in stable coins when the volatility is to the upside, because most of the traders in markets are bulls, so they expect the price to go up. So when USDT dominance goes up, that means that the bulls are actually retreating from other assets that are supposed to move. And here you can see, by the way, the 50-day moving average catch up that actually marks the reversal of the trend here. And you could expect some natural resistance here, and it could also, just judging solely from a technical perspective, from the technical analysis perspective, you could expect it to maybe, even if you are very negative on the markets overall, and maybe you're expecting recession further down this year, you could expect it to not to just to burst it through these recent highs. You could expect it to do something like this, maybe create another wave of volatility contraction, another fractal with, if you could consider this as a cup with handle, build out the handle for it. So short term, or maybe even intermediate term, this USDT dominance chart looks quite vulnerable. And obviously when we take a look at the stuff that is actually moving there, you see that this is almost exactly the inverse situation here. The moving average, the declining moving average is catching up with the Bitcoin, and more or less with lots of other names in the decentralized finance, new finance, BTC, crypto, whatever you call it. Like I like to call it the new financial system, or the alternative financial system. You can see that I'm sorry, it's catching up. So the selling pressure that is supposed to reveal itself here when it's time to support short selling, just like you are supposed to support your long positions when the price is near the 50 day, doesn't seem to be too ready to show up. And in this context, it's very important to remind ourselves of the sentiment here, because the sentiment these days is basically as bad as it gets. And we have this US-Iran war that is turning out to be a prolonged war, and right now we don't see any like obvious resolutions to it. And the world overall isn't getting any more peaceful, unfortunately, or any more stable. So when the war broke out, the Bitcoin market and the Ethereum market and other names in this list were supposed to go down, but it's not the case right now. They're actually resisting the trend, the negative trend, these sales, so to speak. And what we could see here at the same time, we could see this moving average catch up and maybe some bounce. When you think about this bounce, I think you could take into consideration that the 200-day moving average, the declining 200-day moving average, and also put in consideration this recent price structure, because here it seems, and especially if you take into consideration these price bars, these accumulation bars, here we have way more trapped short sellers, and maybe as well some longs as well, and lots of people and organizations were dragged into these sales. I was the one who was attempting to short sell Solana here, actually. Somewhere here, I think it happened, and I was stopped out. I had a close stop, so I was obviously out of this negative situation. Was quick to cover. So that's the first thing: negative sentiment, potentially lots of trapped short sellers, and a potential to rally to back to this price structure. And in case of Bitcoin, maybe it will be like a confluence of two factors, like the price structure and the declining 200-day moving average. So it's quite bullish, and it's quite bullish with a contrarian flavor that makes it, should it succeed, obviously, even more pleasing intellectually, because it's cool to be right when lots of other smart people are wrong. So that's the first thing to consider here. As I've said, you see the variation of this picture through other coins and protocols, but there are other factors that point to the potentially bullish scenario. The first one is the breakout in hyperliquid. I'm very guilty of this, because if you follow my Twitter, I was closely monitoring it for months already, but I missed this buying opportunity because it broke out when I was sleeping. And obviously this is a good reminder to keep your orders typed in when you go to sleep, because it's a two-edged sword with these markets. They trade 24/7 and they're gapless, so there is no gap risk, but at the same time you could when the next setup happens, you could just be sleeping. Also, for my own educational purposes, I should mention that this point was a good point to scalp, actually, it, and maybe make a few % gain to pay for maybe other trades, longer term trades, because everything is very volatile still. But the fact that breakouts happen in a supposedly bad market is a very huge argument for the bullish side, because breakouts don't happen when the markets are really bad. And this is not the only one. Obviously, this is a unique situation. This is the leading on-chain exchange, and as I've said it before, and I will once again, I'm just warning you, I will keep saying it, they will be very, very notable in global finance in the coming years, or maybe even decades, because it's just a software, and they are capturing significant, very significant trading volume these days. So this is the first example. The second example is good too, and you can see my famous, like I'm just telling you everything about my method here. So the first one was my quote-unquote unique 50-day moving average catch-up setup, and now you can see the famous cat ears setup can produce absolutely explosive moves here. So the first, jokes aside, the first thing to consider here is this massive accumulation and this contraction of volume. And once again, like, take a look at the TradFi. I don't like this term too much, but at the SPY or and at QQQ and DIA and the Russell, of course, and you can also take a look at SanDisk. SanDisk is holding, but lots of. Okay, I don't like to use exaggerations, but the indices are very weak. Obviously, these top companies, with a few exceptions, are not so good, and not an outright crash, but some of them could be pointing at a real bear market here. And here we go. We'll look at the on-chain exchange, and we'll look at another on-chain exchange. This is a bit more problematic one. The Aster, the main competitor of Hyperliquid, but at the same time, when indices were going down, this guy is holding up and maybe consolidating, although it starts to look a little weird for me. Maybe, I don't know, we'll see. So this is a privacy protocol. So this is the privacy coin that is, in my opinion, is a response to the increasing quote-unquote adoption of decentralized finance, the alternative finance. Adoption by large institutions, including states, means obviously KYC, AML, increased scrutiny, taxation, and why do large institutions, large entities have resources to develop software and hire manpower to implement this taxation, scrutiny, oversight over investors and traders worldwide? And I think that's exactly what's happening right now, and that could be at least partially being baked into this negative price development with Bitcoin and with Bitcoin and crypto, to be correct with my terminology. That doesn't mean that it's over, though. It just means that there will be less alpha, quite likely. So that's what we see now. So at the same time as the market is going down and oil is going up because the war doesn't look like it's about to have a resolution quickly, we have this resilience in Bitcoin and Ethereum and basically every other altcoin. We see potential new themes showing good relative strength and even breaking out while the market is under pressure today. I mean, the indices, the NYC and individual stocks. So yeah, and to close on a bit more fundamental observations, I think this private credit situation could be contributing to weakness of NYC and NASDAQ, but also to strength in Bitcoin and other new finance protocols, because what we are potentially seeing right now is a private credit crisis in the States that is unfolding at the same moment when oil prices skyrocket. And big names are displaying, big names such as JP Morgan, BlackRock are showing problematic behaviors. They're restricting withdrawals from their private credit funds. And at this moment, we don't know how the big problem with these institutions is that they are enormous, and these financial tools could be contagious, that they are quite likely they are very spread across the industry and the economy worldwide. And in the worst case scenario, that could create something similar to the 2008 subprime mortgage-backed securities crisis. But obviously it's the worst scenario, and central banks are more adaptive. They have become more adaptive to difficult conditions like this. And imagine this happening while there is war in Iran and oil prices skyrocket. So that could be bad. But why isn't Bitcoin going down? And we also see a number of protocols go actually up, because what do you think they're going to do to save the day? They're going to print, and they will print like their appetite only goes higher. And this is the original premise behind Bitcoin and many other consecutive protocols, coins out there, to be a counter inflationary measure, so to speak, available 24/7, available for self-custody and stuff like that. So this is a complex situation. Like, it's always a mix of technicals and fundamentals and a good share of contrarianism. And some things are working just as we speak. As I've said, the legendary cat pattern in AZTEC, the new, I'm sorry, I described the cat pattern, but not not the theme behind it. It's a privacy protocol similar to Monero. You can trace it with certain how do you say it, like, what's it, a privacy protocol, that's enough. Alternative financial infrastructure like Aster and Hype, strong Bitcoin, maybe pricing in a potential increase in liquidity injections by the Federal Reserve. So it's a difficult environment, but if you know what you're doing, I think we could be up to some interesting and maybe even contrarian trades here. Let's stay in touch. Bye.